week, concerns over the European economy send crude oil prices to a 6-month low. Find out what this means for your stock investment. The Aditya Birla Nuvo stock crashes after reporting a 42% drop in fourth quarter profits. We'll tell you if you should continue to hold on to that stock. And Prakash Devan recommends Reliance Industries as a smart investment option. We'll find out why. Welcome to All About Stocks. You're watching ET Now. It's been a rough week for those of us who are invested in the equity market. We've had a lot of bad news. The rupee is at the lowest it's ever been. The Sensex is down at 16,000. And we've had a lot of pessimism in the market. On a week like this, we're glad to help you out. We'll explain to you what the movement in the market means for your investments and what you should be doing right now. Remember, there's an email ID at the bottom of your screen where you can write to us and send us any question you might have about your equity investment. You can also reach us on our Facebook page. Before we go any further, my colleague Navneet is here with the latest on the markets. Navneet.
Well, it was the fourth weekly decline for our markets, but towards the end on Friday, we did close on a positive note, some sentiment returning in the market, but still the Eurozone crisis are weighing heavily on the Indian markets as well. So for the week, if you look at the benchmarks, Sensex and Nifty closed down 0.5% down, whereas the broader markets actually underperformed, where BSE Midcap Index was down by about over 1% and Small Cap Index was down by about 2%. It was State Bank of India which showed up the positive sentiment during the week. The company released its quarterly number on Friday. The profit figure was about 4,050 crores, so that was a good set of numbers which SBI reported. If you look at the stock, it was up by about 5% for the week. The biggest loser on Nifty was Tata Motors, which fell by about 12% after the JLR reported the full set of April sales numbers.
Right, Navneet, thank you for that information. I'm going to bring in Manisha, who's the editor of Commodities and Currencies here at ET Now. Manisha, tell us what's going on with the rupee and with those crude prices and what it means for us as investors.
And the crude is headed for a third weekly decline. We have seen the prices go down by 4% in this week, down nearly 12% for the month of May. The concerns have been many and majorly of supply increase. If you look at the U.S. inventories, those are at a 22-year high. The Saudi Arabia output is at a 30-year high. And there have been statements from OPEC as well where they say that they were looking to increase supplies. The economic data coming out from U.S., China and Europe has been on the weaker side, telling you that the fuel demand is going to go declining. Well, the Indian rupee was one thing that has continued to decline as well. 7th straight week of decline coming in for that one as well. Rupee has declined nearly 1.5% for this week, and we have seen the unit decline nearly 11% in last 3 months. Well, the India's deficit concerns, economic challenges, high inflation, low growth, all of those have been the factors weighing on to the Indian rupee. And apart from that, it has to do with the international concerns where euro is trading at a 4-month low, also weighing onto the rupee. While RBI has been continuously mixing up intervention and administrative steps, people feel that it's too less and there is a genuine liquidity crunch in the Indian markets, and that is weighing onto the Indian rupee.
All right, Manisha, thank you for that information. Joining us to help us understand all of that is Prakash Devan of Asit C. Mehta Investments. Prakash, we're fortunate to have you in the studios today because I want you to help us understand what's going on with all of the bad news we've heard in the last week. Can you tell us what's going on in the Indian markets?
I think it's primarily a convergence of a lot of negative figures that have kind of accumulated and which refuse to go away, domestically as well as from overseas cues. So you have already issues that we were grappling with prior to the budget. You had a huge fiscal deficit. You had inflation that was getting stubborn. Interest rates were not really, in a position to be softened. And suddenly you have the European crisis, and a risk of trade, as they call it, which means that there is a strong risk aversion globally to invest into equities, and people are moving into safe harbor investments like gold and the US dollar. Now, when that happens, and you kind of see a situation where things are just looking weak for us domestically, and suddenly, globally also things turn equally bad or worse. There's a complete indifference in the market. None of the FIs are willing to look at investing into India. Even if there's a positive news flow, look at numbers. They've been, I think, fairly strong. Q4 numbers, I don't think have been disappointing from any angle. But investors just refuse to take fresh positions because there's so much of pessimism attached to investing today. I think, as they say, it's always darkest before the dawn. So hopefully this could probably pave the way for some fundamental buying, value buying into the markets. It's just an assurance that people need that things could look up at some stage.
So it's a combination of things, pessimistic things at home, bad news coming from global markets. You said hopefully maybe this might be the end, but I want to know very clearly from you where you see, I mean it's difficult to call the bottom at this point, but where you see the bottom right now from where the Sensex and the Nifty are, do you see it cutting far further?
No, not really. Look at pure numbers. The Sensex earnings today are available at closer to 13 and a half FY13 earnings I'm talking about. The Sensex is available at a very attractive valuation, whereas throughout, if I remember correctly, 2011 earlier part, we were trading at about 17 times. So you have a situation where it's at 13, which is very attractive, and if earnings continue to grow, and if not even very, I would say majorly, even moderate growth in earnings in the next 2 quarters could probably bring down the Sensex at a multiple of about 12 and a half, which to my understanding is very attractive. But realistically speaking, equities is a trying asset class nowadays. Globally things have changed, and you could have long waiting periods, which could run into years before actually equities pay off. But my sense is, give or take 6 months, we are very close to a level where it makes imminent sense from an earning perspective to buy into the market, especially some of the good companies on the Sensex and the Nifty, and you definitely get at least about 15% plus kind of returns here on.
Okay, so that is an optimistic call given what we've been hearing in the market. I want to quickly talk to you about the rupee. We had Manisha also give us all of that bad news about the rupee. We've had calls where people are saying 58 or 57. Now that is the other end of the pessimistic spectrum, but where do you see the rupee going, and do you think the RBI has more ammunition at this point to control the fall?
Certainly. I don't think they have done it wholeheartedly, and as I believe rightfully so, because they themselves don't know what is the extent of the damage that they would need to control. So they would rather wait for the external factors to get in place or to be much more clearer and visible. I think the rupee should probably find a bottom closer in somewhere between 55 and 56. But there is a lot of pessimism where you hear about levels, as you said, 58, 59 happens all the time. But it makes meaningful sense for investors to buy into the Indian markets at these levels, given the kind of potential 10%, 12% upside that they could actually fetch from 56 onwards.
Crude at this point, we've seen it soften remarkably. It's at its lowest it's been all year.
Right.
It's at about 100 to a barrel right now. But in India, we're still paying a lot for crude because of that exchange rate. Where do you see crude going? Do you expect it to soften further because there's lower demand coming in from the rest of the world for crude?
That's true, and that's one of the reasons why, if you look at the forward premiums have disappeared. There's anticipation that the demand for crude is going to be soft, and most of the people who are consuming crude actually are not in a position to pay off. So, that itself is making people look at alternative solutions. If the dollar were to stop firming up, we would be in a very favorable position, and not just crude, overall in the commodity basket itself.
All right, so here's the big question then. I'm a retail investor watching at home. I'm seeing my portfolio dwindle away over the last couple of weeks. What do I do now?
If your portfolio has already lost value, it's eroded, the two explanations. One is you probably had a trading bet which didn't go the way you expected. One was an investment call. If it's a trading bet, book your loss, don't fret about it, get out of it. But if it were a very simple long-term investment call, go out and average it out, because there's nothing wrong in buying more of good stuff. In fact, that's what you should be ideally doing. But you need that discipline, you need that kind of gumption to go ahead and do it. If you do it, I'm sure you'll pay it off. You'll pay off very fast in the next couple of quarters.
But if you have the stomach to hang on in this market, Prakash says you should be averaging out your stocks that will reward you by the end of the year. Now, another one of these investment options that we picked up earlier this year that might not be looking very good to us is Aditya Birla Nuvo. Prakash, you recommended this stock when it was trading at about 825 with a target of 1,080. That stock ended the week at 754. Now, the company posted a 42% decline in its consolidated net profit for the last quarter, and it was punished by the market. Now, we know that decline was largely because of a tax obligation, but the stock is down about 300 points over the last month or so. Prakash, what's your recommendation to a viewer who picked up the stock when you recommended it? What should we do now?
No, first and foremost, if they have not exited at a target price closer to that level when it actually did attain those levels, I don't think there's any disappointment there. You could probably buy into this stock even today. Because as I said, it's an extraordinary item that has brought down the entire bottom line. And you have the telecom business, which is a huge component of the AB Nuvo pack. And actually that's brought the entire balance sheet to a little bit of a weakness. But given the fact that it's again finding some focus in terms of diversifying into retail in a much significant way now, I think AB Nuvo will actually unlock itself in terms of value. And today's level are definitely worth getting into or averaging out if you had to.
We're going to take a quick break. On the other side, we'll talk about some of the stocks that Prakash is recommending to us this week. Reliance Industries. We'll find out why or if we should be investing in it right now.